Is the dollar's rally running out of steam? A deep dive into global FX markets. The US dollar, once on a relentless ascent, seems to be showing signs of fatigue. Despite positive economic indicators like the ADP payroll figures and ISM services data, the greenback has surprisingly corrected lower. This unexpected turn raises questions about the sustainability of its recent rally, especially as equity markets stabilize. But here's where it gets intriguing. Could this be the beginning of a broader USD pullback, or is there more fuel left in the tank? USD, a correction in the making? The dollar's muted reaction to strong economic data suggests that markets may have already priced in much of the good news. Additionally, the recent rally appears to have been partly driven by safe haven flows during equity market instability. However, with equities regaining their footing, the dollar's appeal as a safe haven might wane. And this is the part most people miss. While the dollar has reclaimed some of its safe haven status, the Japanese yen remains the preferred defensive tool in the FX market. Japanese officials' verbal interventions have so far lacked follow-through, potentially diminishing their impact over time. If risk-off sentiment fails to materialize, we could see increased upward speculation on US dollar to Japanese yen, testing the Bank of Japan's tolerance levels. The dollar's dilemma: lack of compelling shorts. While there are signs the dollar's rally is losing momentum, markets lack a convincing narrative to rebuild dollar shorts. Limited data releases and cautious Fed communication leave few catalysts for a significant shift. Today's trading is expected to be range-bound, with lingering risks of further dollar correction due to short-term overvaluation. The Challenger job cuts data, due today, could add another layer of uncertainty, potentially surprising on the downside for the dollar. Controversial question: will the Supreme Court's tariff ruling impact the dollar? The Supreme Court's review of the Trump administration's tariffs has sparked considerable interest. While our baseline scenario suggests tariffs will remain regardless of the ruling, this decision could have broader implications for trade policy and, by extension, the dollar's trajectory. What do you think? Will the ruling be a game-changer, or is it much ado about nothing? Euro. Undervalued and ready for a rebound? The euro is trading significantly below its fair value, with the dollar's rally outpacing what can be justified by short-term factors like rate differentials and equity market performance. At the current spot rate of 1.151, the euro is estimated to be undervalued by 1.3%. This raises a critical question: will the euro rebound as markets rebalance, or will it require a hawkish shift from the Fed? We anticipate stabilization in the pair, with potential upside risks to 1.160. Norway and Sweden, central banks in focus. In Norway, the central bank is unlikely to cut rates today, given its recent policy projections and stable macro inputs. While underlying CPI eased slightly, headline inflation accelerated, and higher U.S. rate expectations have pressured the NOK. We expect no changes in communication, with a neutral impact on the currency. Meanwhile, in Sweden, hotter-than-expected CPIF inflation data supports the Riksbank's unchanged stance, making further cuts unlikely. This reinforces our bearish view on euro to Swedish krona, with a near-term target of 10.90. GBP. Bank of England holds, but December cut looms. Markets are pricing in a 25% chance of a Bank of England rate cut today, but we expect a hold. A single positive inflation print isn't enough to sway the MPC majority. However, a dovish vote split could signal a lower bar for a December cut. Interestingly, GBP may see some upside today if markets don't receive clear signals of a December move. But here's the catch: prospects of tax hikes and upcoming CPI data could ultimately consolidate dovish bets, limiting GBP's upside in the coming weeks. See dovish winds blowing through the region. In the Czech Republic, October inflation surprised slightly on the upside, driven by food prices. However, recent energy price cuts and government subsidies paint a more dovish picture. The Czech National Bank's forward guidance will be crucial, as we expect a neutral to slightly dovish tone, challenging hawkish market pricing. In Poland, the National Bank cut rates by 25 BP as expected, but the focus is on Governor Adam Glapiński's press conference today. Will he signal further cuts or stick to the 4% rate level? This could sway PLN's trajectory, though we expect Euro/PLN to remain range-bound. Final thought. What's next for global FX? As we navigate these complex market dynamics, one thing is clear: the FX landscape is ripe for surprises. From the dollar's uncertain future to the euro's undervaluation and the CE region's dovish shift, there's no shortage of storylines to watch. But here's the million-dollar question: which currency will emerge as the unexpected winner in the months ahead? Share your thoughts in the comments. We'd love to hear your take.